Hi everyone, welcome to KatRox Trading. I thought today I would talk about current market activity by reviewing the SPY. I'll give you my 6 reasons of why I think we're headed for a reversal to the downside, along with my trading strategy if this turns out to be true. So the first technical indicator I want to look at is the moving averages. Up here in blue I have the 21 EMA, and in green I have the 9 EMA exponential moving average. As you can see here on February 24th, these two moving averages crossed, indicating the end of the bull run that was going on over here. So since we've crossed, we've been in a downtrend all the way to the lows of 218.26. We've recently had a pullback, but the moving averages have not crossed yet. And I don't think that they are going to cross, considering that we are below the 100 and 200 EMA. So as of right now, I'm looking at this as a downtrend, and this is just a pullback. How far the pullback is going to go, this leads me to my next technical indicator that I like to use, which is the Fibonacci retracement tool. So if I draw this from the high of 339.08 to the low of 218.26, you can see that we're at the 50% retracement level. And in fact, if I correct this here, you can see that we broke the 50% retracement level, but we actually did not close above it. So this to me means that this could be a sign of resistance for the bulls, because they weren't able to close that candle above the 50% retracement. The 50% retracement level is a significant Fibonacci level, so I would not be surprised if the market starts to reverse at this level. So that's the second reason why I think we might be headed in for a reversal. Moving on to the third reason has to do with resistance lines. So previous support lines are now new resistance lines. So I see it here, and I'll draw this one here. Now remember, these new resistance lines does not mean that the candle has to reverse exactly at these lines. These are just an indication of a resistance zone that I see. We previously hit this zone here, 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 and even in the recent downtrend here. So this zone area is pretty significant for a possible reversal, and it corresponds to the 50% retracement level. So coincidence? I don't know. Now let's talk about the fourth technical indicator that I see for a possible reversal. Based on Elliott Wave Theory, if I'm thinking that this is a pullback of the recent downtrend, I'm looking to see that this is wave A, B, and C. So based on symmetry, which is the fourth indicator that I want to look at, using the Fibonacci extension tool, so if I want to compare wave A to wave C, using this tool, I can see that wave A, if this is 1, we have hit 78.6%. This would mean, if we hit here, that would mean that wave A and wave C are equal. But as of right now, we are 78.6% of wave A. Even though this isn't a one-to-one exact symmetry, not everything is exact, so based on the other factors, I could see a reversal at this level as well. Alright, so moving right along, I want to look at timing. We established indicators based on price action, but I want to look at the x-axis, or time, to see if there's any relationship going on there. A tool that I like to use for this is the Fibonacci time extension. So if I use this from when we made the high back on February 19th to when we had our recent low, March 23rd, we get something like this. If the main direction is down and the recent bull run is a pullback, I'm looking to see that this pullback is in shorter time frame than the main impulsive wave. So as of right now, we are coming close to the 61.8% time relationship versus this downtrend down here. So this again would be a good spot for a reversal because it's coming up to the 61.8% based on timing, which would be April 13th, Monday. So as you can see, a lot of things are adding up. But finally, I want to share with you my last reason why I think we might be headed into a reversal. Based on these two candles, I'm seeing the beginnings of the formation of an evening star reversal. We will have to wait until Monday to see if we get the confirmation, which would be a red candle like this here with volume. But if that does form, that would be another indicator that we are headed back to the downside. Especially with this star formation. Even though it's green, the body of the candle is very tiny, so that tells me that, it's practically 50-50 with the bulls and the bears. So we'll have to find out next week to see who's going to come out on this one. So with these 6 technical indicators that I mentioned, moving averages indicating that we're in a downtrend, a 50% retracement level, resistance levels, symmetry, and timing, this leads me into my trading strategy if the market decides to reverse on Monday. So if we get confirmation that this evening star has been completed and a red candle forms here, I'm looking to go short using options at the low of this candle and putting my stop slightly above this star. My target is going to be a 2-to-1 profit loss ratio, and I might hold one option for the bigger move depending on price action and what's going on in the news and things like that. But I don't know if we're going to go back to previous lows. But if I have my entry here and my stop here, 2-to-1 ratio will probably be down here. So I'm shooting for at least some of the move. If we go ahead longer, then I'll keep that option. But as of right now, I'm just looking to capture this small part here if we do head back down. Again, time will tell, but that's what I'm looking for on Monday. If you have any questions or comments, feel free to leave it down below, and see you in the next video.